Big question I'm sure you get is how do you pay yourself? So, like, how should a
Mhm.
business pay for themselves?
So it depends on how you're structured. So sole proprietorship, you are the business, so you can take money in and out as freely as you'd like. You could even just have a personal checking account or
Mhm.
personal account that all the money goes into. It doesn't really matter. There's no kind of differentiation between you and the business. Once you start creating entities, then it gets a little different, right? So LLCs, not quite. LLC, if it's a single member LLC, you probably want an LLC bank account. Put money in and take it out as freely as you'd like to. If you have a multi-member LLC, then you have to worry about equal payments and things like that. We get into a little more restrictions are with corporations. So S corporations, again, not quite as bad. You can still take money out, but you just have to track your basis and your kind of retained earnings in the business. Just so you have to be a little more conscious of that, but you can still take money out. C corporations are probably the most restrictive, where you're going to have to pay yourself a salary or a dividend to get money out. And there could be some tax issues where you're paying a little more in taxes with that. That's why most small businesses don't use a C corporation.
I'm sure that's a question that you ask new business owners now is
Mhm.
just how are you paying yourself? How can you pay family members who are legally helping in the business?
As long as they're working, you could pay them a salary. And it's a great strategy you can use if you have kids that are able to work. You can't hire your 6-month old son, 6-month old kid to do something, but have kids that can actually do work, or even if they're younger kids, have them clean up the office or do certain things. You could pay them and actually transfer some of that income to them. And obviously, if they don't have any other income, then they're probably below the standard deduction, and much or all of that payment that you pay them is going to be essentially non-taxable to them, but you still get a deduction as payroll deduction on your tax return. So you're getting a free deduction on that. No one's paying the income on it, but you're getting the deduction. So that is a great tool that you can use, but you just have to make sure that they're actually doing the work and you can document it.
And documentation is always a key
Yes.
word
Yes.
there.
Yes. That's always important.